Good afternoon, my fellow traders. My name is Michalis, and I'm one of the market analysts here at HF Markets. And I'd like to welcome everybody to NFP Friday, where we're going to be looking at a live analysis. Now, for those of you who don't know what we mean by live analysis, and you never have visited one of our previous live analysis sessions, this is a very quick session, approximately 30 to 40 minutes, where while the NFP data, which creates a lot of volatility, is released, we analyze the market live. So we look at what indications there are. We look at potential signals which are being triggered in the market or potential trade setups as well. And of course, we're going to be analyzing exactly what the information which is released means for the financial trading market. So not necessarily only one asset itself, but potentially it could be multiple assets. It could be, for example, gold, the US dollar, major currency pairs, and also indices, ETFs, which are very popular at the moment as well. Now, before we get started at looking at analysis, because what I want to do is I want people to fully understand how to potentially be able to trade a major release like this. Indications, signals, major price movements, and also, of course, what the news itself means. Before we start looking at that, though, just so everybody is aware, here at HF Markets, it's not just live analysis that we offer. We offer every single day analysis via our analysis page, which is an article which provides indications, confirms technical analysis, fundamental analysis. For example, today we were looking at the New Zealand dollar against the US dollar, and we confirmed that there currently is a signal that the price may decline. So far, we are seeing the prices declining indeed. Um, but we also offer copy trading. We also offer PAM accounts. So for those individuals that have never traded before, they can look to trade and copy another strategy provider, which potentially has more experience with the market, or even a lot more experience with the market. But what we're going to do today, though, ladies and gentlemen, is we're going to see how these piece of data, which is about to be released just in less than 15 minutes, is going to create so much volatility within the market. So what is going to be released? Now, I'm not going to look at the less important announcements, because overall we have 7 announcements here. But from those 7 announcements, only these which you can see in red are going to create the main impact. They're the most influential data which is about to be released. Now, of course, we've got the average hourly earnings. Now, the average hourly earnings was actually approximately 6 months to 12 months ago one of the most important announcements. Why? Because we were seeing very high levels of inflation. At some point, we were even seeing close to hyperinflation. In some countries, we were seeing hyperinflation. So, because of that specific economic condition, the average hourly earnings, which is basically how much everybody's salaries are growing in America, was the most impactful. Now, today it is going to be important, but it's the less important of the 3 announcements. The most important will be equally the non-farm payroll, which is basically going to confirm over the last 30 days how many more employed individuals there is within the market. Now, that is, of course, important because we have to take into consideration the more employed individuals, the more possibilities there is of the US economy growing, the more taxes which are being brought in, the less benefits which need to be paid, and the stronger possibility of what we know as a soft landing taking place. And of course, the soft landing is ideal for the US economy. ETFs, indices related to the US, as well as the US dollar as well. The only one which potentially may not benefit from a soft landing, potentially, is gold. Doesn't mean it's necessarily going to collapse completely, but maybe it's not going to have such a strong influence. And the last thing is, of course, the unemployment rate. Now, the unemployment rate is expected to stay the same, expected to stay at 4.2%. If we're looking at the non-farm payroll figures, now the non-farm payroll figures previously were expected to remain the same. Um, But we have to keep in mind we've already had quite a lot of employment data released this week. We had the JOLTS job openings, which were better than expected. We had the ADP announcement, which again was much better than expected. So, because of the fact that we have better than expected employment data, then actually this consensus, basically this prediction today is slightly higher. So if we want to see a lot of volatility, if we want to see something which is extremely positive for the US dollar, then ideally we want it to be not necessarily only higher than 140,000, but ideally higher than 140,000, because a lot of economists over the past 24 to 48 hours have already increased their expectations, which is why the US dollar has increased in value, because the pricing of the US dollar has slightly changed. Now, throughout today's session, now that we've got a good understanding of what's going to be released in only 8 minutes' time, throughout today's session, you can ask as many questions as you like. So, for example, I can see somebody here saying, what do you think about gold? I've got another individual looking at gold and saying to me, what's the current indication for gold? So, we're going to be looking at this throughout the day, throughout the session. And of course, if you have questions, if there's something specific you want us to look at, please leave a comment, and of course, we'll look at it, ladies and gentlemen. Now, we spoke about gold actually in today's morning analysis, and we said in today's morning analysis a couple of things. Now, the first thing we said, ladies and gentlemen, is that gold is actually sitting very, very close. Whether we're looking at the current price here or we're looking at the high that we previously were at earlier in the day, we're very, very close to a resistant level. So if we look at these two blue lines, ladies and gentlemen, you can see we found resistance here, we found resistance here. Across the board, we can see we found resistance at this level. We also, ladies and gentlemen, uh, found resistance at the higher level. So we can see here the higher level is also another level where a lot of the time we're finding resistance. Now, some people on that higher level may wish to slightly increase it, but we can also look at the day's high as a resistant level as well. I can see quite a lot of questions. Please, I'm trying to analyze and look at the questions at the same time. Uh, Please write the questions down, and we're going to look at the assets step by step, after the other. Because I can see somebody now saying the Nasdaq, somebody else is saying the Dow Jones. Everything's going to be looked at, ladies and gentlemen. So, because of these resistance levels, we have to take into consideration the price potentially may decline. The price has already declined now, though. So, what can we take into consideration now that the price has declined? We rose to that resistant level. We found resistance at that point. Now, resistance level is not like art. It doesn't mean if it goes to that resistant level, the price is going to decline. But today was a scenario where we took that into consideration. Why? Because gold is inversely correlated with the US dollar. The US dollar has been the best currency of the week. So the fact that it increased in value, it got to that resistance level. And we also saw, number one, US dollar has been increasing in value for 4 days. The VIX risk indicator significantly declined today as well. And bond yields also declined as well. So there was a lot of fundamental reasons to think that, yes, indeed, actually that resistant level is going to stay intact. It has stayed intact. It did decline. It's still declining. But what can we take into consideration? Because we are about to get the announcement, ladies and gentlemen, in 5 minutes. So we need to look at, once the announcement is made, what kind of price movement way may we potentially see. Now, we're still looking at higher lows at the moment. We're still, even though we're finding resistance at that level, we've still also got higher highs. In addition to this, we're still trading above the trend line. This is the trend line here, ladies and gentlemen. We're trading above the sentiment line as well. So far, the trend line is crossed over upwards, and we're still slightly above the neutral level of the RSI. So there is still a possibility that buyers will regain within the market. We cannot exclude that. So if the non-farm payroll figure, ladies and gentlemen, is weaker than expected, or for example, the unemployment rate increases, even though that's not what is expected and it's not what we have seen so far this week, even though that is the case, we cannot exclude it. We always have to be prepared for an alternative scenario, even though that's not what analysts are saying in the market. So, as the price at the moment retraced from the resistant level, I've got a couple of options. Option number one, ladies and gentlemen, is I can very simply draw a Fibonacci retracement level. I'm drawing the Fibonacci retracement from the retracement high and the retracement low. And you can see I've got a 0.65 level here. So I'm going to draw my red line, my blue line at that 0.65 level. Now, if the price is going to, because it's declined at the moment, but if it increases above that, then that's basically saying to me that's enough volatility and enough momentum to say that these higher highs and higher lows will continue. So that, ladies and gentlemen, potentially may be an area where we can take into consideration that gold will increase in value at that exact price. But again, ideally, if the non-farm payroll figure and today's employment data will pressure the US dollar. So that's one thing that we can take into consideration. Now, an alternative, if we want to speculate the price increase, is to look at an earlier entry. If we want to look at an earlier entry, then we can look at the latest swing high. This is the latest swing high here, ladies and gentlemen. And there's two theories that we can look at. Some people will look at the swing high and say if it crosses above that, that's where I'm going to enter my buy. Some people will look at 75% of that. So, for example, that is, ladies and gentlemen, 0.25. Some people may look at 75% of that, which is basically at the 0.20 more or less. So some people may look at an earlier entry somewhere like this. But again, this is only if the non-farm payroll figure is going to pressure the US dollar. Otherwise, ladies and gentlemen, we can look at the price of gold declining. Potentially, if we looking at a very, very short-term trade, because I can see some people here are saying, I'm a scalper. Another person here says, I'm a scalper. If you're a scalper and look at a very close take profit, which is going to be a very quick trade, then of course we can look at our trend line, which is basically the 75 bar exponential moving average. Or alternatively, we can look here, ladies and gentlemen, at our price sentiment line. Somebody here says, are we also going to look at order flow analysis? We're not going to look at order flow analysis, but what I can tell you, because I've got it on another chart here, I've got some data which is available to you. If we're looking at cumulative delta, then currently today there is more sellers than buyers within the market. This is point number one. Point number two is if we look at the volume weighted average price, the volume weighted average price is above the current price. So those are both indications that potentially the price is going to decline. But like I said, it's massively, massively going to depend on the announcement which is about to take place in 90 seconds. Now, some people here are asking about currencies. What I'm going to do is I'm actually going to go to FinViz. I'm going to go to Forex. Then I'll go to Performance. And if we're looking at currency so far today, ladies and gentlemen, this is currency so far today. The best performing currency of the day is the British pound. The worst performing currency of the day is the New Zealand dollar. The New Zealand dollar again was in this morning's market analysis. The reason why we said that would decline is because number one, the US dollar has been performing amazing this week. Number two, because the Reserve Bank of New Zealand is expected to cut interest rates on Wednesday. So of course that's negative for the currency. So what does this mean? This basically means that if we want to speculate against the US dollar, there's benefits to doing so with the pound or the Japanese yen because they're the better performing currencies of the day. Also keep in mind that the pound is the best performing currency of the year. If we want to speculate the price of the US dollar is going to decrease in value, by the way, this has just massively changed. We said the New Zealand dollar. Okay? It is the New Zealand dollar if we want to speculate that the price will decrease, that the US dollar will increase in value. So let's go back to what we were saying. What did I say, ladies and gentlemen? US dollar best performing currency this week. We said that analysts are increasing expectations for the non-farm payroll figure. Ladies and gentlemen, this is a massive announcement at the moment, something extremely positive. Non-farm payroll figure has come in more than 250,000 more employed individuals. Salaries have increased as well, and also the unemployment rate has also declined. So this is a massive, massive announcement. This is something extremely positive for the US dollar. Let's go to the US dollar. And by the way, we also mentioned gold today as well. We said that gold, it was trading below the volume weighted average price. It was trading with cumulative delta, so there's more sellers today. We said about the resistance point is significantly declined. It's actually declined lower than the target we were looking at was here. So the target's already been hit. So we need to now start to look at the next target. Now, what I will say is, because that's a lot of volatility and we've gone back to that support level, potentially it can slightly decline before continuing that downward price movement potentially. Now, we also said New Zealand dollar against the US dollar. Let's go to the New Zealand dollar against US dollar. Let's type in New Zealand dollar, US dollar. And let's put that on the charts, ladies and gentlemen. Look at this. I mean, today we uploaded the article this morning stating that the indications of the New Zealand dollar, US dollar potentially indicate a decline. We uploaded that at 10 o'clock. So GMT, that's at 7 o'clock GMT. If we go to 10 o'clock, ladies and gentlemen, 10 o'clock is here. The price so far since then is trading 0.84% lower. And even as we're speaking, that price is declining. So, guys, we've got a sell signal here. We're trading below the trend line. We're trading below the price sentiment line. The only negative, ladies and gentlemen, is that the RSI is now in an oversold area of the market. So that is definitely something we need to take into consideration. The price is oversold. What we can look at, what we can take into consideration is we can look at the candlestick here. What we can do is even look at the price open of the candlestick or the whole candlestick itself. What a lot of people also do is they switch over to a smaller time frame, like for example here, and they'll look at the exact point of the announcement was made. So they'll look at the point here all the way up to the candlestick here. So this is a 15-minute time frame. And if a retracement does form, it could increase all the way back up to here. So we said there was going to be a lot of volatility. That kind of a retracement is a lot of volatility in itself. Now, because it retraces back up to there, doesn't necessarily mean it's going to increase in value against the US dollar. It's just volatility. There's always going to be a lot of volatility with announcements like these. Even now, as I'm speaking, it's already, can you see, starting to tick up. So there's a reason why I'm saying to people, the take profit was much higher because we didn't want to go into a level which was oversold and the price start moving against us. Because as we're speaking, and as I mentioned it, a few seconds later, we can see, look at the price, it's just increasing in value. It's not an issue though. What we can always take into consideration is if it does increase upwards like this, we can, if we wish, draw another Fibonacci level. So we can draw from the high to the low, like so. And again, if we decline after retracing, if we decline back below 65, that's again a renewed indication that the price will continue to decrease in value. So we've got a lot of indications here, ladies and gentlemen, that the price of the US dollar will increase in value. That's also something that's negative for gold. We can see gold is attempting to burst back upwards again. So again, if we're looking at Fibonacci levels, a retracement can increase all the way up to here. So that's also something to take into consideration. Again, if it is going to retrace, let it retrace. It's not an issue. Let it retrace. We will draw another Fibonacci retracement level like so. And then if, we cannot guarantee it, but if it does start to decline again, and it declines below the 0.65, so it declines below this blue line after retracing upwards, then it's a renewed buy signal. So it's not always about, I said to him at the very beginning of the webinar, and I've been saying it this week. We had a live analysis session actually on Wednesday where we said the Euro USD would decline. It's not always about being correct and the analysis being correct. It's also about timing. So, yes, now this announcement is negative for gold. Maybe indeed gold will continue to decline. Potentially, that is the strongest possibility, but there's no point knowing that if the timing of the trade is incorrect, because there's no point trading now. The price is going to increase all the way up to here. You're going to be in a big minus. You may have a margin call, and then the price starts moving in your favor. There's no point doing that. Why get a margin call? Why hit your stop loss? The timing should be correct. Again, as I'm speaking, and it's all from experience because I've been in the market for 10 years. I've been a financial advisor as well. I'm a licensed financial advisor in 2 countries. Um, you know, even as I'm speaking, it's happening. We can see the prices increasing in value. So it's about when it regains momentum. When does it regain momentum? Especially with gold, we have to be cautious. But the US dollar, we really need to rethink about the pricing of of the US dollar and of the monetary policy, because we're looking at the monetary policy. Yes, economists did say that no matter what happens with employment, there is going to be another interest rate cut of at least 25 basis points. Why? Because inflation has declined, the monetary policy does not need to be that restrictive. Most probably, the inflation will remain low or continue to decline, regardless of if there's going to be a 25 basis point cut or not. So a cut, according to economists, is guaranteed. But what now potentially we're looking at is there's not going to be another cut. So there will be a cut in November, 0.25%. Then the Federal Reserve will pause and won't cut again in December. That's a possible scenario. The scenario which potentially may change that is if inflation actually declines significantly. In which case, regardless of the fact that the economy is resilient, the employment sector is resilient, and it can cope with higher interest rates, they won't opt to keep it higher and they'll cut another 0.25 basis points. Either way, though, it's something which is positive for the US dollar. But what we need to be cautious about is the volatility now, because we've seen such a big price movement. We've been seeing big price movements throughout the day. Like I said, in regards to the Euro USD, we've been speaking about this for days. We spoke about it actually on Tuesday. Let me see, actually, if we may have still the entry points from Tuesday. I'm not sure. Sorry, from Wednesday. Let's see. No, we didn't keep that. I didn't keep those levels on. But if you go to YouTube, you can see that session, the live trading session from Wednesday, and you can see the areas that we pointed out was where there was signals to speculate a decline, and it was much higher than the current price. It was approximately around this level here, and you can see the price now is significantly lower. But again, Euro USD, the price is below the trend line, below the sentiment line. If we're going to switch on and look at Bollinger Band, most likely we're still lower than the Bollinger Band. So that's basically indicating there's still room for it to retrace higher before it continues its downward momentum, if it's going to continue its downward momentum. That's something for us to take into consideration. But the MACD is on the negative side. Also, the stochastic oscillators pointed downwards, it's crossed over downwards. The RSI is still oversold. So indications is basically that sellers are controlling the market, so the US dollar is controlling the market, but there may be some pullback. Again, as I've saying it is pulling back slightly higher. But like I said previously, it's not an issue at all. Look, Fibonacci retracement levels, 0.65 level, if it's going to drop below there, we can look at that as an indication that It's regaining downward momentum. If it retraces slightly higher, again, we just increase the Fibonacci retracement levels, and of course, that entry level will slightly increase to a higher level as well. Now, somebody mentioned the Nasdaq, so we will look as well at the Nasdaq. Somebody has also said if we can look at. Somebody also said if we can look at fundamental factors. Of course, we can. The Nasdaq opened on a very large price gap. This is extremely interesting, guys. The price gap here is 0.30 because the news, of course, was significantly positive. And like I said, regardless of the fact that uh, the monetary policy isn't going to be adjusted so fast, it significantly increased the risk appetite of the market. Uh, the soft landing is the main scenario. Again, even with higher data, we're still likely to get interest rate cuts unless we see something change with inflation. If something changes with inflation, then of course that's negative for the stock market, but that hasn't happened. But let's look at other factors as well. Let's go to futures. Let's go to performance and let's look at indices. Look at indices, ladies and gentlemen. So, what I want to do is I want to look at the global picture and sentiment towards the stock market. Now, we've got the Nikkei 225s up 1.28%. The Russell 2000 is up, the Nasdaq is up, the Eurostox 50 is up, the DAX, the CAC, the S&P 500, the Dow Jones is up as well. There's no global indices which are declining. So all global indices are up. So that is an indication that demand for this type of market is increasing. So that's a positive indication there, ladies and gentlemen. Another positive indication is if you look at the bottom of the screen, you can see the VIX. The VIX. This is the biggest decline today so far, almost 3%. What is the VIX? The VIX is a measurement, basically. It's used, should I say, it's used as a measurement of risk. So if the VIX is down, the risk appetite of the market has increased. If people's risk appetite is stronger, their demand for investments and risk-based assets to get a better return and get a profit is of course higher. So that's again positive for the stock market. Let's look at the Nasdaq components. If we look at Nasdaq components, if we look at the top 12 influential stocks, we've got AMD, we've got Netflix, Alphabet, both classes, Costco, Tesla, Amazon, Meta, Broadcom, Nvidia, Microsoft, Apple. All of the 12 most influential stocks are increasing in value today. So again, if we look at component analysis, that is also another buy signal. What a lot of other people do is they look at all stocks which hold 1% and above. So at the moment, it's 20, the top 24 stocks. So you can see here, top 24 stocks. If we look at those 24 stocks, 1, 2, 3, 4, 5 are declining. So if we do 5 by 25, 80% of the most influential stocks of the NASDAQ is increasing in value. It's like if I say to you, if would you rather speculate the Nasdaq is going to decline, but 80% of it is increasing in value? Would you want to do that? Maybe you would if you're trying to trade against the trend. But if you're with a theory that the trend is your friend, you're not going to do that. So this is another indication. All of the most influential stocks are increasing in value, which is basically the 12 and above. But 80% of stocks holding 1% and above are also increasing in value. Bond yields are going to be very interesting. Let's look at bond yields. Bond yields plus 0.84, 0.084, so 84 points higher. Now, higher bond yields is negative. Okay, higher bond yields is negative. The reason it's declining, increasing in value, is because people think there's going to be a more hawkish Federal Reserve and a less dovish Federal Reserve. But what we can do, because higher bond yields is normally negative for the stock market, doesn't mean though the stock market will decline. It just gives a more negative bias. Uh, and if we look at, so this is just me re-checking the indication. If we look at the FedWatch tool, which is provided by the CME Group, basically the Chicago Exchange, they still believe there's going to be an interest rate cut. Nobody believes there's not going to be an interest rate cut. So people still believe there will be an interest rate cut. And even in December, again, they still believe there's going to be an interest rate cut. So people at the moment, main pricing is 25 basis points in November and then 25 basis points in December. So regardless of the fact that bond yields are higher, and this is something which is basically putting less pressure on the Federal Reserve, there's still going to be interest rate cuts. It's just that it's not going to be 50 basis points, it's going to be 25 and then 25 a month after that. So will the stock market really deem that as something extremely negative? You have to keep an eye on it. But nonetheless, here we can see the global sentiment towards indices is positive, same towards the stock market. If we look at the Nasdaq individual stocks are performing extremely well as well. And if we look at the FedWatch tool, we're still expecting interest rate cuts. So the Nasdaq, of course, continues to decline. I haven't been looking at the chart for 5 minutes because we were looking at what we were looking at on Google. And to be honest, in the last 5 minutes, while we've been speaking, it's already increased in value 0.10% while I've been speaking and while we weren't looking at that. And we can see again, it's still increasing in value. So you can see exactly how I'm analyzing the market. I'm getting a good picture of how the market is pricing the market, why they're pricing the market, how they're trying to drive the market as well. And the great thing about the Dow Jones, the Nasdaq, ladies and gentlemen, if I go to a large time frame, let's go to a 4 hour time frame, and then I go to the Nasdaq. If I look at the Nasdaq here on the 4 hour time frame, even though we're seeing a significant increase, we're not at an all-time high. We're not at an all-time high, ladies and gentlemen. And even though we saw a lower high, lower high, lower high, and we're still on a lower high, regardless of that, if we look here, we're on a higher low. So at worst, so far in the longer term, we're just looking at a symmetrical triangle pattern. And if we're looking at a symmetrical triangle pattern, we've already broken through that. We can see here, we've already broken through that. Now, some people also use that symmetrical triangle pattern, which is basically here. Where the price crosses above it, that potentially is where, if it retraces, it will retrace too. So if we're going to see it retrace now, that symmetrical triangle pattern indicates the price movement, while it's still moving upwards, would look potentially something like that. That's something we can take into consideration. Also, we may take that into consideration because here you can see that's also more or less where the resistance level has been flipped onto a support level, which is a very well-known level as well. But we can see here, ladies and gentlemen, again, we're above the trend line once more. We're above the sentiment line. We're currently on the RSI at 59 almost at 59. Very, very close to 59. We're not quite there yet, but 59. We can see indications here that buyers are controlling the market. The other thing we also need to keep into consideration is we're now approaching earnings season. Earnings season will start next Friday. If we're going to look at the main companies, it will start next Friday. So, of course, markets now that they've got clarification from earnings data will start to increase exposure. I'm not going to confirm a direction, but increase exposure regardless of the direction based on the announcement which has been made, and to get ready themselves for earnings data which is about to be released. Now, I've got a question here. It was earlier on, let me just scroll up, about earnings season. Here we go. And basically, what I will say to just answer that question as well, if we're going to look, ladies and gentlemen, at the Dow Jones, So here, for example, we're looking at the Dow Jones. We're going to look at the Dow Jones. The Dow Jones and the S&P 500 will see slightly more volatility and an effect from the earnings season at the start, basically because the most impactful stocks, such as, for example, United Health Group, JP Morgan, for example, and a lot of defensive stocks, are mainly exposed within the S&P 500 and the Dow Jones, and they're not really exposed with the Nasdaq. The Nasdaq will start to see a stronger influence in the second to third week. Why? Because that's where growth stocks, so a different category of stocks, growth stocks, which are basically stocks which are mainly concentrated on growth, they tend not to pay dividends. In a bad stock market, they tend to crash quite a lot. In a good stock market, they perform extremely well. Um, those stocks perform extremely, are very much exposed to the Nasdaq. So at the moment, S&P 500 and Dow Jones may see more volatility at first, and then it will switch to the Nasdaq. Some people, though, of course, may not be looking for that much volatility at first. And we've just gone above the 59, like I previously said a few minutes ago. So we just did that as well. So, ladies and gentlemen, we can see an amazing announcement. An amazing announcement. Just to go back to the announcement to confirm what we're seeing, ladies and gentlemen. The average hourly earnings was more than expected. This month alone, salaries in America increased by 0.4%. So annually, that's 4% this year already. That's higher than inflation. Very soon, that may be higher than the federal fund rate. So that's definitely something which is positive for the US dollar. Positive for stocks as well, as we can see, because we're still likely to see an interest rate cut. Um, the only thing I will say is it may become something extremely negative for stocks if inflation increases in value, because then we've got no pressure for the Federal Reserve to cut, and they're no longer able to cut because inflation has stalled or inflation has increased. So that can suddenly become a very bad story for the stock market. But we're not seeing that at the moment. We just need to ensure that when that announcement is about to be made, which is in a few days' time, next week, towards the end of next week, we keep that in mind. Um, Average hourly earnings higher, non-farm payroll figure is higher as well, um, and the unemployment rate has declined. So positive potentially for the US dollar. We've already seen it significantly increase in value. Negative, positive for the stock market so far. Negative for gold as well. Just to recap as well, all global indices are higher today. The VIX is lower. Previously, the VIX was 3% lower. Now it's 3.67% lower. So keep that in mind. Stock market increasing globally today so far. Worst performing currencies today is it's a fight between the Japanese yen and the New Zealand dollar. At the moment, it's the Japanese yen. The best performing, actually, the only index which is increasing in value is the US dollar. So that's very interesting as well. What I want to say, also, very last thing I'll say is if we're looking at a weekly basis for currencies, the best performing currency this week was the US dollar. The second best was the Canadian dollar. The reason for that is because of the higher oil prices as well. Worst performing, like I said, Japanese yen, New Zealand dollar. Also, something we need to keep an eye on is the euro as well. Because the euro, we've had indications throughout this week that inflation is lower, economic data is lower, and the ECB are getting ready to cut interest rates again. So that's it for today, ladies and gentlemen. Let's quickly make sure I've got answered all questions. Somebody says here, can you add me onto the company's Telegram channels? If you go to support the support team, ladies and gentlemen, so let's go to our website very quickly. If you type in HFM, go onto our website, you can see here we've got a live chat. If you request a live chat, straight away somebody will start replying to you. If you want to be added to our Telegram groups, of course you could request that. You can request that through the live chat. So keep that in mind. Bear with me. So the live chat is here on the bottom of the screen, so the bottom right of the screen. The other thing I want people to be aware of is if you're struggling and you don't yet have enough experience to be following analysis like this and trading on your own, it's not an issue. Look at here, we've got copy trading. So for free, we will not charge you to use copy trading. You can copy other traders from around the globe. So it may be because they've got a good success rate. It may be because they have a lot of knowledge. It may be because they have a very large account or a lot of experience. You, as an individual, can copy their trades. And as HFM, we will not charge you for that, of course. The last thing I also want to say is for those more experienced traders who are trading by themselves, is of course that we offer swap free trading and extremely low spreads as well. So, ladies and gentlemen, that's it for today. Trade safe, trade responsibly, like I always say. Enjoy the rest of the day trading. Enjoy the weekend as well. And if you need any assistance from us at any point, of course, you can get into contact with us. In the meantime, though,